Hi friends, my name is Sarvan Kumar, your economy faculty. Welcome to Rathod's IAS. Friends, from today, the Rathod's IAS is starting a new initiative called Economic Weekly. Guys, if you follow the trends of UPSC these days are not only expecting us to have a good clarity with respect to the facts, not only the facts guys, but UPSC also wants you to have a good analytical ability and conceptual clarity. Say for example, if you take the previous questions in the economy, one of the question asks in such a way, which of the following is most inflationary in nature? Right? Which of the following is most inflationary in nature? Such kind of a questions cannot be dealt with ease by just knowing the facts. You should have a conceptual clarity with respect to the total chapter inflation. Then only you can answer such kind of questions. This is the new trend UPSC is following. Now, in order to cope up with the new trend, guys, this is not a new trend, but of course, this is the old trend which UPSC is going back again. So, in order to cope up with or in order to go through and sail through the new exam pattern of the UPSC, you should also have a good conceptual clarity as well as analysis of the facts. So as a result of it, keeping in mind, we at Rathod's IAS started this new initiative where you are going to get both the analytical part as well as current affairs at a same class. It is designed both to cover the prelims where you get the whole conceptual clarity and the mains also where you get all the different dimensions of any particular issue. And the name itself suggests that it's an economic weekly. Simply all those economic current affairs which appears in a week from different sources such as Indian Express, Live Mint, Business Line, Hindu Business Line, The Hindu and PAB. So in such a way, taking the current affairs from multiple sources, we have designed this course. To put it very simply for you, Economic Weekly of Rathod's IAS is all about dealing with the current affairs of economy comprehensively, where you get both the conceptual clarity with respect to the static syllabus as well as you are also going to get the current affairs. So as a result of it, you can cope up with the new trends of UPSC. So I hope it is very clear for you. So without any delay, let's begin our class. See, these are the new current affairs which appeared in the newspapers, different newspapers in the last week. So the first one says breaching limit. India's retail inflation accelerated to 6.1% in January 2022 and marginally breached RBI's upper tolerance limit of 6%. You all know that the inflation rate should be maintained by the RBI as a part of inflation targeting between 4 plus or minus 2. So the inflation should not go below 2% or inflation should not go above 6%, right? So this is the current affair. Now, as I said in the beginning of the class itself, it is not only important to have what is this inflation rate and what is this all about in our mind, but it is also very important for us as an UPSC aspirant to have a conceptual clarity with respect to what this inflation is all about. So without any delay, first we will try to analyze the concepts, the static part of this same current affair, and then we will have these facts in our mind. So by that, in such a way, you can completely align your preparation like the way in which the UPSC wants you to do it, right? I hope it is very clear. Next, when it comes to the meaning and definition of inflation, see guys, if you observe this diagram, during 1970, right, a cup of coffee's price is about $0.25. Now, by 2019, it is about $1.59. Now, you cannot express that. See, if we subtract 0.25 minus 1.59, see, here we have the 4, here we have the 3, right, 1.34. You cannot express the inflation rate as $1.34. So if somebody asks you what is the inflation of the coffee when compared to 1970 in the year 2019, you cannot just simply say the inflation is about $1.34. Say for example, in the year 2022, if the price of a pen is 10 rupees and in the 2023, if the same price or the same pen's price increased to 15 rupees, you cannot simply subtract that amount from it and you cannot express the inflation as 5 rupees, because you remember, inflation is not expressed in rupees, inflation is expressed as percentage change in the price index of the current year when compared to the previous year. Now, without any delay, let us try to understand what is this price index is all about with an example, and how to calculate the inflation also, right? See, now we will come back to these facts, but before we do that, we will try to have the analysis, try to have what is this price index is all about, and with a basic example, we will also try to calculate how the price index is going to help us in identifying the inflation rate of a product in this year when compared to the previous year. So clearly you need to remember this basic formula. So the formula for the price index here is, the price index is the current year's price by base year's price into 100. Now let us try to take an example of wheat. Try to take an example of wheat. Now here let us take the base year. Everybody knows that the base year currently is around this, the 2011 and 2012 is the base year currently. Now in the base year, the price of wheat, say for example in 2011 and 2012, the price of wheat is 20 rupees per kg. Now in the year 2012 and 13, observe carefully, the price of the wheat is 30 rupees per kg, and in the year 2013 and 14, the price of the wheat is 40 per kg. Right? Now let us try to calculate the price index of the each year, by using the formula. So what the formula says? So the price index of 2012 and 2013 is the current year's price by base year's price into 100. What is the current year's price here? The current year's price is 30. Right? We are calculating the price index of 2012-13. So it becomes our current year. So the current year's price index is 30. So 30 by the base year's price is 20 into 100. So what do we get here? Right? So 150. So the price index of the year 2012 and 13, right? Year 2012 and 13 is 150. Now similarly, we are also going to calculate the price index of the year 2013 and 14. Similarly, if we calculate the price index of year 2013 and 14, what do we get here? So the prices of the current year 40 by the prices of the base year 20 into 100. So we will get 200. So clearly the price index of the year 2011 and 2012 and 13 is, the price index of the year 2012 and 2013 is 150. The price index of the year 2013 and 2014 is 200. I hope you clearly observed this. See, the price index of 13-14 is 200. The price index of 12-13 is 150. Now, see, I said you in the beginning of the class that the change in the price index of the current year when compared to the previous year is called inflation rate. So, in order to calculate the inflation, we have the formula, the current year's price index by the last year's price index by last year's price index multiplied by 100. Now if we substitute these values, now we are calculating the inflation rate of the wheat in the year 2013 and 14. Now if we substitute the values, the current year's price index, the current year is 2013 and 14, 200 minus last year's 150 by last year's price index 150 into 100. See, 50 by 150 into 100. So we have 1 by 3 into 100. So almost we get 33.3%. So the inflation rate of wheat in the year 2013 and 14 when compared to the year 2012 and 13 is 33.3%. See, here the price of the wheat in the year 2012 and 13 is 30 rupees and in the year 2013 and 14 is 40 rupees. So what is the difference? 10 rupees. We cannot simply express the inflation of the wheat in the year 2013 and 14 when compared to the previous year as 10 rupees. We express the inflation rate as a percentage change in the price index of the current year when compared to the previous year. So when we calculate the inflation rate in such a way, the wheat's inflation in the year 2013 and 14 is 33.3% approximately. So this is how you calculate inflation. This is how you should have a clarity, guys. So in such a range, you should have the clarity with respect to all the concepts in the economy, without which you cannot practically attempt the questions in the UPSC prelims as well as in the mains. Having a basic foundational knowledge with respect to each and every concept of economy is very important. As I know, many of you who are listening to these classes comes from different streams. So as a result of it, without going any fast, I am clearly explaining the concepts for you. Right? I hope it is very clear. Now, each and everybody who listen to this class can clearly calculate the inflation if you simply get the prices. How can you get the prices? You go to the market, find out the prices and find out the prices of the previous year and the current year, and you can calculate the inflation. Now, the same kind of an inflation, the way in which we have calculated the inflation of this particular wheat is done in two different ways. See, now let us come to the statics. As I said, the Economic Survey 2008 and 9 observes inflation is an upward movement in the general prices of the goods and services, as I said, and is estimated. So it is not expressed in monetary terms, it is expressed in the percentage rate in the change of the price index over a reference period of time, like in our examples. So this is the meaning of it. Just memorizing the definition would not help you in your UPSC preparation. You should have a practical knowledge. I hope you're getting it right now. Next. Now, when it comes to the price indexes, I hope everybody knows the meaning of price index right now, by now, right? You also know the percentage change in the price index of the current year when compared to the previous year is equal to inflation. It is also very clear for you right now. Now, if we have calculated the price indexes of the wheat and we have calculated the inflation by using the price indexes of the wheat. Now, if we do the same thing of all the goods that are transacted in the wholesale market, you know that in the wholesale market there are a lot of goods being sold and purchased. Remember, the wholesale market, in the wholesale price index, we only calculate the change, percentage change in the goods, only goods but not the services. So the wholesale price index does not take into account the services, which you need to remember. Now the price index is an average measure, as I said. So the price indexes are of two types: the general price index, that is wholesale price index, or the consumer price index. Very simple. We calculated the price indexes of the wheat and we calculated the inflation rate. So far the clear? Now if we calculate the price index of all the goods that are transacted in the wholesale market, and if we express the percentage, if we express the inflation rate, then is simply the wholesale price index. Say for example, there are 200 or 300 goods sold in the wholesale market. We know how to we know the prices of the goods in the wholesale market. Take the prices of the current year and take the prices of the previous year. Now calculate the price index and also calculate the inflation rate. Take the average of all the goods, you get the wholesale price index. Simple. Now similarly, the consumer price index is also same, but see, consumer price index is here in the wholesale market. If we calculate the inflation rate of all the goods transacted in the wholesale market, but in the consumer price index, we only calculate the price index of only particular basket of goods, right? Particular basket of goods, and we express the inflation. This is as simple as that. I hope you know how to calculate the inflation, and if we calculate the inflation the same way for the whole goods that are transacted in the wholesale market, you get the WPI inflation. And if we calculate the same price index and express the inflation for only a basket of goods, you will get the consumer price index based inflation. Simple, right? Next. See, the base year is selected and in index is assumed as 100%, right? And on its basis, the price index for further index is calculated. Just now we have discussed how this index is calculated. So this is how you calculate the inflation rate for the economy. Now when it comes to the weighted indices, see, we have different kinds of, in such a way we can calculate the different sets of goods and services to calculate and to express the inflation. Say for example, we have the wholesale price index. Just now we have discussed, it is all about the change in the price index of the all products sold in the wholesale market. Now we have the consumer price index, IW, industrial worker, urban non-manual employee, and the consumer price index and the rural laborer. We have discussed all these concepts very clearly, like the way in which we have discussed the definition and how to calculate in fact the inflation in our economic classes. So please do visit our website and try to find out the economic classes, and in fact you are provided with 3 demo classes. So I have dealt the economic classes in the Rathod IAS in the same way that you have listened to the inflation, how to calculate the inflation. So do check out this website and try to have the courses and try to improve your conceptual clarity. Next, when it comes to the CPI industrial worker, until 2009 government only used WPI to calculate inflation. It announced that inflation through the newspapers. Once it announced this WPI inflation through the newspapers, so it is also called as headline inflation. Why it is called headline inflation? Because of this reason. Next, however, currently inflation is calculated on the basis of CPI combined. Next, now for the CPI, the weights are assigned on the basis of consumer expenditure survey. Right? Now, what is the meaning of assigning weights? Right? You also should know the meaning of assigning the weights. See. Next, for example, the meaning of assigning the weights. Say for example, if we consider the price rise in a particular product is about 150. Remember, 1% is equal to 100 basis points. Right? 50 basis points means 0.5%. 150 basis points means 1.5%. So if we consider price rise in these particular products is a particular goods is 150 points, then only 30%, according to this formula, only 30% of the price rise can be increased in the basket of wholesale price indexes purchases. Say for example, guys, remember this is the basket of goods and services. Now these prices are 100 rupees. Now if it is increased to 110 rupees. 110 rupees. Now this 10 rupees need to be increased in the salary of that particular person. This will be done by the government in the name of DA, dearness allowance, right, for the government employees. And try to comment on the section what would be the same in case of pensioners. What would be the same in case of pensioners, right? Now this is the meaning of this assigning weights. Now we have, as I said, we have the wholesale price index, which is compiled. The authority responsible for compilation and release of this index is the Office of Economic Advisor, the Ministry of Commerce and Industry, and this is the base year. As I said, when we look at the commodities, right, now the primary articles, fuel, light and lubricants, and manufacturing products. Now you need to remember which items has a lot of weightage in the consumer price index. So when we look at the consumer price, the wholesale price indexes, 64% weight is given to the manufacturing products, and next it is given to the primary articles. These are very much important for your prelims. Just try to remember them, right? Next, as I said, is a wholesale, this consumer price index. This consumer price index is all about some basket of goods and services. So the government employees' salaries are revised on the basis of the changes occurring in this index only. The dearness allowance is provided to them, and you need to comment what about the same kind of an incentive given to the pensioners in case of inflation. Right? The authority for the compilation is the Labour Bureau Shimla under the Ministry of Labour. I hope these facts are very much important and just try to remember. Now, as I said, when the pay commission recommends, you know about the pay commission. When the pay commission was constituted, and even the pay commission is going to revise the salary of the workers on the basis of this CPI AW. Simply imagine this guy is an industrial worker. He consumes a basket of goods and services. Now, yes, these goods will go inflation over a period of time, right? Say for example, for all these goods, imagine the inflation rate is 13%. He consumes a basket of goods, set of basket of goods and services, and his inflation is, for example, 13%. Just now we have calculated how the inflation rate will be calculated for any particular good. If we calculate the inflation of all these particular goods, if we take an average, then we will get the CPI IW inflation rate. Now this much percentage of the salary should be increased for the industrial worker. It will be done and recommended by the pay commission. It is as simple as that, right? Next, when we look at the weightage in the CPI industrial worker, highest weightage is given to the food articles. Try to remember the weightage of each and everything, because it is very important. UPSC might ask which of the following items have a lot of weightage, great weightage in the industrial worker, CPI industrial worker, and which items have a lot of weightage in the WPI, right? In such a way you need to remember. Next, now the RBI is considering the CPI combined. CPI combined means CPI rural and CPI urban. In the same way, see, when we look at the weightage of the goods in this particular rural and urban combined, we have the food and beverages as a highest number. So even you need to remember what items have the highest weightage in the rural and what items have the highest weightage in urban, right, and what items have the highest weightage in combined and next miscellaneous. So in such a way you try to remember the basic data which has the highest weightage, which has the lowest weightage in WPI and CPI combined. So calculating the inflation rate by using the price indexes. And what is this WPI inflation? What is CPI inflation? The authority to compile it. What are the goods? What are the list of the goods that are in the CPI and WPI and which has the highest weightage? These are the important facts you need to remember when compared to when we discuss about the important facts. Now, according to the rate of inflation rate, we have different kinds of inflation rate, like a 3% for 4%, like walking inflation, creeping inflation. All these are discussed in a great detail in our economic classes. So try to find it, right? Let's move to the next topic. When we look at some important concepts with respect to these, when we look at the important concepts with respect to the inflation, we have the Phillips curve. So as I said in the beginning of this class itself, just understanding the current affairs, just remembering the facts and data that is presented in the current affairs is not only important, but it is also important to have a knowledge with respect to the statics. Stats is also very much important because these are tested these days. So in the same class, I am giving you the each and every concept. The Phillips curve shows the relation between the rate of inflation and rate of unemployment. You need to remember, guys, the UPSC just asks, the Phillips curve is all about. It shows the relationship between inflation and unemployment. Or the second option might be, it shows the relationship between sustainable developmental goals and its achievement. So in such a way, they will trick the options and you know very well about it. So in such a way, remembering about these is very much important. As I said, the Phillips curve is all about showing the relationship between the unemployment and inflation. See, observe carefully, when the unemployment is low, the inflation is high. So it shows the relationship is negative, that is, at the high rate of inflation, the unemployment is very low. See here, when unemployment is 3% and the inflation is very high. When the inflation is reduced to 2%, unemployment rate increased. So this is all about the Phillips curve. You need to remember it. Now next we have the base effect. This is very much important. Even in the budget and economic survey, we have the mention of this base effect. So what is the base effect? It refers to a phenomenon of the current year's price index being influenced by very low or high year's base year price index. Just now we have discussed in the beginning of the class what is the meaning of current year's price index, what is the base year's price index, and altogether what is price index is all about. See here, you know, we need not to take the prices of any particular good, just we are going for the price index. I hope you know how to calculate the price index. So the price index of the year 2010 is 110, the price index of the year 2011 is 120. It's an example. The rate of inflation for the year 2011 is the current year's price index minus previous year's price index by previous year's price index into 100. We got the inflation rate as 9% around. Now when we look at another example, right? Here the inflation rate is 5%, 5.5%. Now when we compare, when we analyze it, remember or observe carefully here, the difference between the price indexes in the above example is 10. The differences here in the second example is also 10. Now, but even though the difference is just 10, because of the price indexes, the numbers, the inflation rate have changed. See, from 5.5% to from 9.9% it is changed to 5.5%. So due to these changes in the numbers of the price indexes, we have the varied inflation rate. Even the differences between the years of the price index is very less or one and the same. This is called base effect. This effect is called base effect. See, right? I hope you understood. In both the cases, the index number is increased by 10, but the rate of inflation is different. Right. The rate of inflation is low in second case compared to the first case. The rate of inflation is low. This is because of the difference of base year's price index, base period index. This is called base effect. I hope it is very clear. Now when we look at the next of the important terms, see, when the inflation is decreased, we call it as deflation. Now, when the deflationary situation is rising, when the inflation rate is decreasing day by day, we call it as a reflation, right? Now, you all know general rise in the price of goods and services is called inflation. It is very important. And if the inflation decreases, if the inflation rate decreases, we call it as disinflation. Still, the curve is in positive, right? Now, here it is in negative inflation, and if it is going to, if the inflation is increasing from the deflation, if the prices of the goods increasing, we call it as reflation. So try to remember this deflation, reflation, inflation and disinflation, very important terms. Next, I hope this is the definitions provided to you. Just to go through all these definitions. Next, we have the very important term called inflation spiral, right? See guys, now when we look at when we discussed about the term value added, see, value added, in the value added, compensation to the salary is very much important. To put it very simply for all of you, see, whenever, see, imagine this is a product, imagine, or say for example, these are the basket of goods and services which are consumed by this particular person. Now, this particular person might be working in some other area. Say for example, the prices of all these basket of goods and services which are consumed by this person is 100 rupees. Now, there is an inflation in the economy and the prices of that basket of goods and services increases to 120 rupees. Now, in order to make this person to cope up with this inflation, that is to make the person to buy the same old basket of goods and services, we need to increase his salary. When his salary is increased, remember, he is a part of, labor is a part of cost of production. Labor is a part of cost of production. When labor is a cost of production, when labor is a part of cost of production, remember, if his salary is increased, if his salary is increased, automatically means the cost of production is also increased. Now, if the cost of production is increased, the prices of the goods also again increases. So, in such a way, if the prices of the goods increases, we will get the inflation. If inflation is there, the person who is consuming the particular goods, his salary need to be increased. When his salary is increased, again the cost of production increases, and again the prices of the goods increases, and it is going to be a continuous cycle. We call it as inflation spiral or wage spiral, right? Right? I hope it is very clear for you. Next, we will discuss about the export surges. India's merchandise exports increased by 25.3% year on year to 34.5 billion in January 2022. When it comes to the growth rate of the imports, it is just 23.5% when compared to the exports. So, we are particularly at an advantage and we are trying to become a net exporter. Right? When we look at the facts, important facts, guys, for the UPSC prelims, upcoming prelims, these facts are very much important. Just try to keep it in your mind. So, we will look at, these are the data provided by the economic survey. As I said, this economic weekly is not only about getting the conceptual clarity with respect to different concepts, but it is also to analyze the facts, important economic facts that appears in different newspapers. This is appeared in your economic survey. So, the top 5 export commodities are petroleum products, pearls, precious stones, iron and steel, drug formulations and gold jewelry. UPSC have a history of asking these kind of facts. So, try to remember it. So, the top 5 export destinations for India is UAE, USA, China, Bangladesh and Hong Kong. Next, top 5 commodities, crude oil. Remember this. These commodities also very much important. UPSC asks about the export and imports of commodities. Crude oil, gold, petroleum products, pearls and precious stones and coal. And next 5 top imports comes from China, UAE, USA, Saudi Arabia and Iraq. So remember these facts. Next, these data is very much important, guys. Which country have a trade surplus with India? Which country we have a trade surplus with? So this kind of an analysis part is also very much important. Even it is provided by your economic survey. India has most favorable trade balance with the USA. When we look at this table, you can clearly observe that we have a positive trade balance with the USA. And when we look at the trade deficit, we have a clear trade deficit with China, that is minus 43.4%. Now you see here the top 5 sources from which we import is, the first country is China. So as a result of it, definitely we are going to have a lot of trade deficit with the China, which is minus 43.4%. So we have a highest trade deficit with China, we have a trade surplus with the USA. Next we have this Bangladesh and Nepal, and next trade deficit is with this Iraq, and next we have this Switzerland in such a way. Try to remember these facts, very much important. UPSC have asked such kind of questions, right? Next. Recently, the finance minister in her budget 2022 announced 30% tax on income on the virtual digital assets. This is very important. Recently, on the transactions of the cryptocurrencies, Finance Minister Nirmala Sitharaman announced that there would be a flat tax of 30% on the transactions. This is a current transition topic which is going on in the economy. So, more or less the central government have given its nod and acceptance for the transactions of the digital currencies in the country. Now we should analyze these topics mainly particularly from the mains perspective. Now when it comes to the rules of the taxing the cryptocurrencies, when it comes to the provisions of the Income Tax Act, the cryptocurrencies are not mentioned in the Income Tax Act of 1961. Who knows, by the time the cryptocurrencies will come into force. So even you find these kind of things in your constitution. The latest mentions will be added to the constitution, latest development will be added to your constitution by creating or by making a constitutional amendment. So in such a way, nobody knows that this kind of a transactions would happen in future. So automatically we can't find these things in the old acts. Although the Income Tax Act of 1961 does not specifically mention cryptocurrencies, it does cast a wide enough net to bring crypto transactions under its ambit. If something comes, some power will be dedicated to the thing. Say for example, in case of citizenship in your polity, the power is given to the parliament by the constitution. Similarly, every act allows such kind of a provisions, right? Now, trading in cryptocurrencies may be classified as a transfer of capital assets taxable under the heads capital gains. You might have heard already in your economy about the capital transactions and capital taxes. So, capital transactions are a kind of two-way transactions. Once the amount goes and it comes in a form of, it again comes back. Say for example, if we give a loan, it comes in the form of interest receipts. So these kind of transactions are called capital transactions. And even we have the capital gains tax. Say for example, if you buy an asset, if you sell it, the tax imposed on you is called capital gains tax. We have clearly discussed all these important UPSC concepts in your economic classes, right? Next. So this is all about the rules that defines this cryptocurrencies. When we look at the challenges currently faced by India in order to impose a tax on these transactions, first, the absence of explicit tax provisions has led to uncertainty and varied interpretations being adopted in relation to the mode of computation, all these things. Still, we are at an initial stage. We need to have a lot of subordinate legislations, and the main legislations need to be enacted by the country. Next, for example, the head of the income under which the trading of self-generated cryptocurrencies are created, or how these are taxed, is very much unclear currently in India. Right? This is a problem. It is often tricky to identify the tax jurisdiction for the cryptocurrencies. Right? As the taxpayers may engage in multiple transactions across various countries. So, identifying the tax jurisdiction for the cryptocurrencies is also very much important. The anonymity of taxpayers, the identities of the taxpayers who transact with cryptocurrencies as anonymous. Right? These are very much important, right, challenges which is faced by the country currently. So, these are the steps need to be taken. So, when we look at the steps need to be taken, right, the income tax laws pertaining to the cryptocurrencies need to be made very clear by incorporating the detailed statutory provisions. So, awareness generation, separate mandatory disclosures, and strengthening international legal framework. All these are very much important to have a robust cryptocurrency taxation mechanism in the country. Right? Try to analyze these things from the perspective of your mains. Just go through all these points so you will have a good clarity. Next, we have another important article with respect to the infrastructure in the country. India's first water taxi inaugurated in Maharashtra. So, when we look at the facts, just a simple article, Maharashtra Chief Minister inaugurated this, right, along with the Ministry of Ports, right. 8.37 crore project will presently operate on 3 important routes. What are these 3 routes? So the Belport to Ferry and the domestic cruise terminal, right? Belport to Elephanta Caves and Belport to JNPT. These are the 3 important routes. So in the initial stage, 7 speedboats will run on these routes. So water transport is getting increased day by day in the country. The ease of transport is a key factor for the investment to set up the business in the region. Remember, infra is the key for the development of any country, right? When we adopted industries as a prime moving force, we don't have a well-developed infrastructure in the country. Now, development of a infrastructure is very much crucial. Let me ask a question. Let ask a question by yourselves. Why the IT companies, see, why the state gross domestic product of the Karnataka is led by the IT? Why the state government of the Telangana's economy is led by the IT? Why the Tamil Nadu is manufacturing hub? Why the Haryana and Punjab kind of a countries have a lot income with respect to agriculture being contributed to their state gross domestic product? The main reason is the well-developed infrastructure. If the Karnataka government develops the IT hubs, well-connected broadband connectivities, Wi-Fi, so in such a way, if the telecommunication infrastructure is well-developed, the companies comes there. So in such a way, development of infrastructure, the energy infrastructure, the transport infrastructure, and telecommunication infrastructure, these are the core infrastructures which are recognized universally. So development of these infrastructure is very much essential. So we have a separate module for the infrastructure in our Indian economic part 2, where we have discussed about all these things very clearly, right? Next. Now, in order to protect the investors, SEBI has laid down the rules and requires the companies to meet certain criteria before they go for the public. So it is very important to have a great idea about the initial public offering, the follow-on public offering, and offer for sale. These are very much important terms you need to understand. First, if you understand this IPO, and then we will discuss about the conditions required for a company, and then we will discuss the advantages of a listed company. Say for example, now let us try to understand how this works, right? Now we will, in a single example, we will discuss about the initial public offering, follow-on public offering, and also for offer for sale. Imagine this is a company. Imagine this is a company, and this company have 1000 shares with it. 1000 shares. Now, right, each share, one share is equal to 1 rupee. So cumulatively, the 1000 shares is 1000 rupees. Now, this company is a completely owned company of the promoters. Now imagine if the company sells shares of 200 shares, for example, if the company sells 200 shares for the public for the first time, it is called initial public offering. If the company shares, see, the name itself is suggesting initial, for the first time. Public offering means selling or offering its shares for the public. This is called initial public offering. Now, by initial public offering, the company gets listed in any of the stock exchanges. The company gets listed in any of the stock exchanges. Now, see, now what is the shares available with the company right now? 800. Now, understand. Now, if the company wants to expand its businesses, it wants to expand this business into different locations. Now, the company wants more money. Now, you imagine if the company issues again a new shares 300, right? Now, this is called follow-on public offering. If the company issues a new shares again after the initial public offering, we call the follow-on public offering. Now, see, now imagine, see, 800 shares is currently with the promoters. Now, you see, recently in the year 2012, the SEBI came up with the new rules, minimum public holding of the top 200 companies according to the market capitalization. What is the meaning of market capitalization? Say for example, guys, this is a company. It is trading 100 shares in the market, and each share's price is 10 rupees. So automatically the market capitalization of that particular company is 1000 rupees. So if we multiply the number of shares into the prices of the shares, we will get the market capitalization. In such a way, according to the market capitalization, top 200 companies need to maintain at least 25% of minimum stock reserves with the public. This is the rule of SEBI. In order to cope up with the SEBI, say for example, here we have the 800 shares with the promoters currently of this company. Now if the promoters sells about 300 shares to the public out of their 800, we call that as offer for sale. Clearly, to put it very simply, in the first 200 shares when this was sold, the amount of this 200 shares, like 200 rupees, will go into the account of the company, and the new shares of 300, new shares, these are the new shares, not out of 800, new shares, the amount of 300 will go into the account of company. Now these 300 shares which are sold to the public, here this 300 rupees will go into the pockets of promoters, because in the offer for sale, promoters sale is sold to the public. So in the first initial public offering, amount goes to the company. The second follow-on public offering of 300, the amount goes to the company. Here the promoters stake, the promoters shares out of 800 are sold to the public, so we call it as offer for sale and the amount goes to the promoters. So this is the main important difference between the initial public offering, the follow-on public offering and offer for sale. To such an extent you should have a clarity, guys. In the UPSC they might ask you the differences between these three important terms, so it is very much important. Now you all know that when such shares are purchased by somebody, if they hold it for some period of time, now if they want to sell it off, now what is the place for it? As you all know, like you sell, or many of us sell our used mobiles in the OLX market. Similarly, we have an OLX market for it, that is the stock exchanges. Once a company goes for the initial public offering, it will be get listed and its stocks can be sold in the stock exchanges, right? Now, what are the minimum conditions? Apart from others, what are the conditions a company must have in order to go for such kind of an issue? See, the net tangible assets must be at least 3 crores. Remember these criteria, UPSC may ask us, right? Net worth of 1 crore in each of the preceding 3 full years, and must have a minimum average pre-tax profits of 15 crores in at least of 3 of the immediately preceding 5 years. So these are the 3 important conditions. These are the facts, you need to remember it. Now when we look at the advantages of listing a company after going for initial public offering, this may help a company to raise the capital, like the way in which after selling 200 rupees comes into the company, diversify and broaden its stakeholders base. So 200 new stakeholders are added by selling that. The listing provides an exit to the existing investors of the company as they can sell off. A listed company can raise share capital for the growth and expansion in the future through the follow-on public offering. When they want to expand, they can go for the follow-on public offering, like the way in which in our example they went for follow-on public offering by issuing a new shares of 300, right? I hope. Now when we go further into this example, the promoters now have 500 shares and the company now have the additional 300 shares, right? This is the main difference between the follow-on public offering, initial public offering and offer for sale, right? I hope it is very clear. Next, we have the next article, India and UAE's Comprehensive Economic Partnership Agreement. This is very much important. When we discussed about the external sector, there we have clearly discussed about even the economic integrations. We have discussed about the economic integrations, right? So guys, right, economic integrations, you know that often the barriers, both we have the trade barriers like in the form of tariff barriers and non-tariff barriers. Say for example, if a country imposes a monetary tax, import duty, anti-dumping duty in such a way, we call such kind of a taxes as, right, trade barriers, monetary trade barriers, tariff barriers. Now if a country says only this much amount, this much quantity of goods can be imported into a country, we usually call them as non-tariff barriers. These tariff barriers and non-tariff barriers are considered as trade barriers. Trade barriers means barriers for the free flow of goods and services, free flow of trade in the economy, right? Such kind of barriers will be reduced in a free trade agreement, right? Now in a free trade agreement, and most of the goods and services, both the tariff barriers and non-tariff barriers will be reduced, and for the rest of the goods a minimum tariff and non-tariff barriers is allowed. will be imposed both by the countries. Now when it compared to the rest of the countries, now these countries, imagine these two countries mostly eliminate both the tariff barriers and non-tariff barriers in a free trade agreement, and in the rest of the goods it is very minimal. And when compared to the other countries, they have their individual trade policy. They maintain their individual trade policy. The highest level of economic integration in such a way is the European Union, which is also known as Economic Union and Customs Union. Now the main feature is almost zero abolition of all the tariff barriers and non-tariff barriers among the goods and services traded between the countries. There is no restrictions on the movement of the labor. Right? The people from one country can go and settle in the other country, which is clearly seen in the European Union. And one other important feature is the common currency. To such a level, the economies can be integrated. So this is the second and third level of economic integration, which is currently India thriving for. So I hope it is very clear. So these are the benefits, right? These are the benefits of the free trade agreement, right? Just go through it. You need to go through it, right? Next, we have the next important article, recalibrating the surges. Right? What is a surge? As I said in the beginning of the class, we should have a conceptual clarity with respect to even the surges, right? Recently, there is a proposals both in the budget for the revamping of surges. So first of all, we should go with respect to what is the surges is all about. A special economic zone is a geographical area. Say for example, this is a geographical area. If we, Government of India, declares it as a surge, right, it is considered as a separate foreign territory, and the tax laws are very liberal. The tax laws are liberal. The tax laws are liberal when compared to the other countries, I mean other rest of the part of the territories. Right? Special economic zone is a geographical area in which the economic laws are liberal when compared to the rest of the country. Right? They are specifically delineated duty-free enclaves and are deemed to as a foreign territory for the operations, trade operations. Now, a such will be having a well-developed infrastructure like electricity, roads, transport, right? And when we look at the evolution of the surges, the Special Economic Zones Act was passed in the 2005, and before that, India was the first in Asia to recognize the effectiveness of export processing zones. This was the old name of it, and Asia's first export promotion zone was established in the year 1965 in Kandla and Gujarat. This is the brief background which you need to remember, right? Next. These are the objectives, like to boost the exports of goods and services from the surges. Say for example, if we provide all these kind of a tax incentives to the companies which are located in the surges, definitely they are going to have an undue advantage when compared to the companies which are located here. Definitely the manufacturing companies is going to have a low cost of production. Say for example, if a company produces a good for 100 rupees, if the tax needed to be provided, paid to the government is very low by the companies located in the surges, definitely they are going to be, the product is going to be more competitive when compared to the product produced in the rest of the surges. Say for example, if I own a tech company in a surge, definitely I am being provided with a lot of incentives by the government. If I am being provided with a lot of incentives, definitely I am going to produce, right? Definitely I am going to produce the product at a cheaper cost, because in the cost of production we have a component called the taxes, production taxes, right? These kind of a production taxes are reduced for me. As a result, the good produced by me in the surge is cheaper when compared to the same good you produced by the manufacturing unit out of the surges. So as a result of it, when the prices decreases, definitely they will be more competitive in the world markets. So as a result of it, the main objective is to boost the exports of goods and services, right? Generate employment, and the rest of the ancillary benefits will come, right? Next, the board, remember this fact, the board of approval is the apex body and is headed by the Secretary, Department of Commerce under the Ministry of Commerce and Industry. It is the main body which gives approval for the surges. The Baba Kalyani led committee, he is leading the committee, was constituted by the Ministry of Commerce and Industry to study the existing surge policy in India and submit its recommendations, and submitted its recommendations in the 2018, right? When we look at the major incentives, when we look at the major incentives of the surges, see, these are the duty-free enclaves, as I said, exemptions from various income taxes, like various taxes like income tax, minimum alternate tax. So we have discussed in the previous classes about the minimum alternate tax in our economic classes. So many of the companies will exempt, many of the companies currently in India are exempted under various laws like income tax and companies act. By getting all these incentives, by getting all these tax incentives, they are paying zero tax to the government. We call them as zero tax companies. We call them as zero tax companies. And in order to make even these zero tax companies to pay a minimum amount of taxes to the government of India came up with the minimum alternate tax. The tax paid by the zero tax companies are called the minimum alternate tax. All such kind of incentives are provided to the units which are located in the SEZs. So these are the advantages. Supplies into the SEZs are exempt from the GST and are considered as exports for many products. Right? Single window clearances for all the central and state government approvals. You know, cost overruns and approvals is one of the major hindrance for the completion of any infrastructure projects and works in the country. So a single window clearance for the central and state government approvals is also provided for all the SEZs. Next, when we look at the performance, presently about 395 SEZs are notified, and according to the latest data, 270 are operational, and about 65% of the SEZs are located in 5 states. This trend analysis is very much important, guys, in the Tamil Nadu, Telangana, Karnataka, Maharashtra and Andhra Pradesh, particularly in these coastal states. When we look at the exports, during the notification, the exports from the SEZs is around 22,840 crores, and it is increased to 7 lakh crores by 2020 and 2021. Right? Similarly, investments is also increased, and exports is also increased to 23 lakh crores from 1,30,000 crores when they are notified in the country. Right? Now, as you know, it is going to increase the foreign reserves. When the goods are exported to the other countries, we will get the foreign money. When the forex is very strong with us, we will have a low balance of payment crisis. Right? We have clearly discussed about the current account balance, the capital account balance in our external sector. Guys, like the way in which we got the conceptual clarity with respect to the inflation and reach of the rest of the static syllabuses, we have dealt all these static syllabuses very clearly in our economic classes. Right? So please do visit the website, and you will be provided with a free demo classes. We have 3 demo classes being provided in our website. Do visit them, do watch them, and try to subscribe it, so that you will get a good conceptual clarity with respect to all these economic concepts. Remember, these days it is not about the facts you read in your newspapers, budget and survey. These days the trends of the UPSC is going in such a way that they need you to have a conceptual clarity. Right? So this is all about these advantages. Right? Just try to find it down. And when we look at the challenges of the SEZs, there is a huge revenue loss to the government on the account of concession to the SEZs. As you know, the government is giving the tax incentives like under Income Tax Act, under the minimum alternate tax. As a result of it, definitely government is going to lose some revenue. Now, according to an estimation of the COG in the year 2016 and 17, because of the incentives provided to the SEZs, the government lost about 10,182 crores. Right? The land acquisition for constituting the SEZs is also another important problem. Land acquisition, red tapeism, all these are very important problems. These are very much important from your mains perspective. Non-compliance with the WTO rules. You all know that WTO is an institution which is constituted for the free flow of trade. When these kind of incentives are provided to the manufacturing units located in the SEZs, definitely they would become more competitive. When they are becoming more competitive due to undue advantages taken in the domestic market, domestic production, definitely the importing country may impose the import duty and anti-dumping duty and make the prices of the goods at the same level in the domestic market. So these are another important challenge for the SEZs. And these days, guys, see, like for the many of the SEZs, the exemptions like minimum alternate tax and income tax exemptions which are given to the units located in the SEZs are not given to them. So it making both the units which are located, manufacturing companies located in the SEZs equal to the rest of the SEZs, which mean rest of the manufacturing units located outside the SEZs. There is no advantage. When such kind of an tax incentives is being removed for them, definitely they are not going to have a good advantage. Right? Now, most of the India's new generation SEZs came up, right, not for exporting. As you know, it is one of the important objectives. Exporting is one of the important objectives, but for avoiding the taxes. Right? Most manufacturing SEZs in India have performed below par, below important level due to their poor linkages with the rest of the economy, right? Next, weak connections of the coastal sedges with their hinterland inhabited these zones from utilizing their full potential. Utilization of the potential is very much important these days, guys. So that's the reason why even government came up with that asset monetization. Try to comment in the comment section what is the meaning of asset monetization. And in the next class, we are also going to discuss about this topic in the next week, current affairs and economic weekly. Many states did not match the central SAGES with the state level legislation, and lack of robust policy design is also one other important challenge which is faced by the SAGES these days. So for the promotion of MSME, you know that about, see, MSME contributes for the most employment, and it is also one of the important sector in the manufacturing. It holds about 40% share in the manufacturing, and about 28% out of these MSMEs comes from the MSME SAGES and MSMEs which are located in the SAGES alone. So MSME sector will get a lot of boost by the development of SAGES in the country. So the promotion of MSMEs investments in the SAGES by linking MSME schemes and allowing alternate sector to invest in the sector specific SAGES is very much important, and also implementing the Baba Kalyani led committee recommendations with respect to the revamping of the SAGES is also very much important. Remember, when you're giving the conclusion and forwards, mentioning the names of the committees and recommendations given by the experts in your main answers is very much important. They are going to add value to your answers, right? So in such a way, Niti Aayog has always been in favor of India taking a leaf out of China's book for the development of coastal economic zones in the lies of Shenzhen, right? In such a way, we need to adapt the best practices from the world and we need to implement here, right? In such a way, we can boost the exports from the SAGES and we can revamp the SAGES. So these are the important concepts, the important current affairs which appear in your different newspapers like Indian Express, Live Mint, Hindu Business Line, PIB, etc. So guys, this is all about these important current affairs of the week. See guys, as I said in the beginning of the class, see, understanding or remembering the facts that you read in your newspapers, your budget, economic survey, remembering the schemes and facts in the economy is not going to sail you through the exam. These days, when you observe the trends, there are about 20 to 23 questions and 25 questions coming directly from the economy. And these questions, if you observe the previous year question paper, they are asking you to have a conceptual clarity. So that's the reason why we have designed this economic weekly in such a way that you get both the static part, the conceptual clarity with a very ease in the first case, and then you also going to have the data with respect to the current affairs. So in such a way, both the static as well as both the static and related conceptual clarity and the current affairs is also provided to you at a single class. So in such a way, we have designed this economic weekly in a comprehensive manner. So please do take advantage of these kind of free initiatives of Rathod's IAS. Right? We will meet in the next class, where we are going to have the current affairs of the economy which appeared in this whole week, right? Thank you. I hope you enjoyed this class. Stay tuned to Rathod's IAS.